just tally up, what did you spend on in, let's say, the last 3 months? And it turns out that you probably will have spent mostly in culture. And I don't mean culture like going to the movies or watching theater play, but I talk about culture about, the clothes you're wearing, basically the things you wore that give you kind of status, right? These are the type of things. And so one of the expressions that we used to give early, and we still do it sometimes, is, we describe culture as the deepest TVL of any economy. Because essentially it's the kind of spend that you put in and you never take out because they mean something to you. And we can see this a little bit with NFTs as well. With all the guys who maybe had a Bored Ape as an NFT and put it with GIF, when they sold it, they always had to give this big sob story. I'm really sorry. I like my grandma needed some help, or all sorts of stuff, right? But if I basically, made a bunch of money, meme coins and just sell it, everyone's like, score.
Welcome back to another episode of Andrew Asks How podcast. With us today, you as well, the viewers. We have a human being in the Web3 space who needs absolutely no introduction. Yat, welcome to the show, and we appreciate you for jumping on. How are you doing today?
Very good, and thank you for having me. It's a great pleasure.
We appreciate you jumping on. I was going to tell you this off camera, but I'll say it on camera. I want the world to know this as well. Usually, I even texted this to John, so John can even attest to this behind the curtain. We've had a lot of guests on. Some of them sometimes have not showed up for whatever reason, and they've not given us a notice at all, and they kind of give the notice a day later. With all the stuff that you have going on, despite real life things happening, we appreciate you letting us know ahead of time. And many people that are, big personnel in the space, if you want to call it that, big wigs, top of the pyramid, the Mount Rushmore of crypto, Mount Rushmore, of the industry itself. How do you still find the time to do the little things out of, genuineness, despite having all that you have going on? Because that is not the norm, especially for people that are individuals that are, at the top of the Mount Rushmore, the craft, if you want to call it that.
Well, thanks for that. I don't know that. So I think you're the first person who would describe it kind of in a Mount Rushmore type of thing. So I certainly prefer not to be described as Mount Rushmore because I think all the guys were dead by the time they were put on there. So I'd rather be alive and not put up on the pedestal. But either way, I obviously understand the symbolic meaning behind it. So I guess, first of all, I'm not really able to respond to everything, right? I do give out my cards and people have my Telegram and they reach out to me, and sometimes a little bit of a lottery as to when I have time to respond to some things, particularly when they're like, unsolicited sort of messages and so on, but I do look at them. And it comes a little bit from my own background, which is, I was a entrepreneur. I came from pretty much nothing, this was maybe like 30 years ago. But the point being is that I had to hustle my way around and I had to sort of talk to people and do that kind of stuff. So I appreciate, when people try to sort of make an effort. Of course, how you make the effort matters too, right? But I think these are things that I appreciate. And I think that's also informs a little bit of our investing philosophy as well. We invest in a lot of small companies, not just because we think it has great potential, but because we think it's those entrepreneurs that actually are building in this way that have this drive. And in many ways, I think the best we can do if we have time to is to encourage them and to give them at least the decency of an answer, one way or the other, even if that's sometimes difficult. And I know that I think the other thing is that not everyone very is able to give the time. And part of this came from my own inspiration when I was starting businesses. I would always man the customer service desks, and not because I was the chief customer service officer or something like that, but because it was a great way to figure out what customers were thinking. And of course, it's a bit different today because today Twitter has become in many ways the customer service desk, at least in terms of sentiment and analysis. But back in the day, it was like the emails and stuff. And then, you'd write back. And, I wouldn't necessarily write in my name. It's just like a customer service rep. It's like, when we were running Outplays or something like that, or gaming businesses. but it gives you a feedback as to what people think. And I think it's really important that we try to stay as grounded and as level-headed in the space so that we can be connected to our audience and our community. So one of the things that sometimes people sort of comment on is that they find me quite approachable in conferences. Like, they come up, and then sometimes depending on what kind of conference, literally there would be on occasion like a lineup. It's not really. It's interesting how this is sort of self-organized, because it's not like there's a guy out there saying, "Oh, line up to have a chat with Yat." It's just that literally a few people come around and then they just form a line. So, which I find actually socially quite interesting, because they basically self-organize and make a determination. Okay, you're here first. You're here, and nobody taught them that. They just kind of did that. But then when they form that line to sort of meet up, then I feel, like, you put that effort together and you try to spend time and you're waiting for me. So the least I can do, if I have time, is to wait for you and have this kind of conversation. So I think that sort of mutuality is really important. So I think it's a little bit sort of how I live life, and I think how we try to sort of build this general philosophy of also the business.
I do appreciate that. And yeah, just so you know, moving forward, when people ask me, how was the interview? How was talking with Yat or whatever? How was the interview? All that stuff. Like, what's your takeaways? My takeaway, the first one, is going to be the fact that you let us know ahead of time, your team plus you, which you literally didn't have to do, of the basic thing, I guess, of, how can I say this? Being a good human being before ahead of time, that's the takeaway. I mean, of all the amazing things you're probably gonna be saying today, that is the takeaway. To your point of being approachable, Robbie, part of your team, also has a very similar aura to that as well. There's figures, I think, outside of the space as well as inside the space. They almost kind of present themselves bigger than life, to where they become almost, I guess, somewhat a little bit unauthentic, and they're not as approachable. You guys have done an amazing job as actually doing all that you've done while still being super relatable, authentic, and being, real human beings. So shout out to you, Robbie, and the rest of the crew for being, that way. I think more people in the world need to be that way. Yeah, there's a lot of things that I do want to discuss today. The first one I have to ask, like, just really, really quickly, right out the gate of the interview. What was the reason you guys, and like the thesis, your thought process for you guys to invest into pudgy penguins, Igloo, and that entire sphere of penguins?
Well, do I really need to explain? In the sense that they are basically, they've done an incredible job in terms of really sort of bringing on, a new generation of people into Web3, the stuff they did basically with the toys and so on. But also, Luca is an incredible marketer. He's very, very driven. And I think, if we had to talk about, and as you know, Animoca Brands is big on NFTs, and we've been really sort of touting the NFT thesis really since inception, starting with CryptoKitties and sort of going deep into that. And so who really has been the champion project, certainly over this last 12, maybe 18 months in the NFT space, it has been Pudgies in terms of the revival story, right? In terms of acquiring basically a brand and then building up to where it is today. And now, discussions around sort of Igloo and so on. It just to me is again what we believe is going to be a big catalyst for the growth of the area. And we've had a pretty big ones already. Because Magic Eden just launched, and that's also one of our portfolio companies. Yep. And the way that it's holding up, sure, it's volatile, whatever. But we're still talking $5 to $6 billion. Okay, so it's not exactly shabby, and with incredible volume, demonstrating basically to me that the NFT market is actually maybe more alive and healthy and well than most people sort of give it credit. And when we talk about sort of Pudgy Penguin and sort of Igloo, I feel almost like if you're in the NFT space, it's almost like, what took you so long? Right? Like if you're
yes, it's almost asynonymous. It's almost asynonymous at this point with the word NFT.
Yeah, exactly. Right. So it's almost like So it kind of totally made sense for us. And of course, we're working together with them, and partnering up with them to basically help them on various areas. And of course, our goal and intention is to help them grow. There's obviously abstract that's coming as well that's related to all that. So we've seen it all tied together. And we see this basically as one is enhancing the space, broadly speaking, in the same way that, Yuga Labs with Bored Apes and, ApeCoin and then eventually ApeChain. These are all initiatives that help grow the space, and they just help build the space together. And we'll, of course, very much engage in ApeChain, ApeCoin, and the whole Yuga ecosystem just as much.
Can you discuss a little bit about the investment structure, if that's possible, if you're allowed to? Obviously, if contracts and legal allow that, or you can't touch the investment structure and like the way things are kind of done on the back end for the contract between Igloo and you guys.
Yeah, so that's not public knowledge, but in the sense that we basically just adjoined ourselves basically to sort of previous round structures. So there's nothing special or unique about it, and since other than that, we have actually a close working partnership sort of that's coming along with it. But from a pure investment perspective, I would say it is, broadly speaking, sort of very similar to previous investment structures that Igloo has gone through.
Got it. Yeah, you also tweeted something yesterday that I do want to bring up, and you obviously know what it is. And you quote, "Top NFT projects are launching tokens, such as Memecoins, and are launching NFTs, the classic cycle of expanding their culture, symbolic, social, economic capital, such as," you name the tickers, "and more." And then you kind of dropped this diagram that was very well done, by the way. The team did a very well job, if there was a team. Can you elaborate on this? Do you think this is going to be the narrative for this cycle, or do you think this is the way forward for the entirety of the space as NFTs as we know it?
I think it's the way forward of the entirety of the NFT and general sort of cultural digital asset space, really since the beginning. So when you think about the trend of what happened in 21, 22, so maybe let me describe essentially what I mean by these forms of capital. And it's very much inspired by sort of Bourdieu's forms of capital, who basically describe these four forms, which is basically economic, social, symbolic, and cultural.
No.
And the way that you can understand economic capital is simple. It's much, right? Basically, sort of fungible elements, if you would, right? But then when you look at, for instance, social capital is a form of reputation. And we see that mostly expressed in things like the Web2 platforms, like Instagram, when you have followers, that's kind of social capital. Or what friends do you know? That's social capital, right? And then the symbolic capital are things like your university degree, your background at work, right? So that's something that you've built up over time. Again, a form of reputation, but it's a form of capital that has a value. And then, of course, finally, you have cultural capital. And cultural capital in and of itself is something that can be represented basically both in an economic way, but also in a, let's call it, class way. For instance, the traditional way that Bourdieu was sort of expressing it was in terms of, if you have an English accent, or if you are well-spoken, or if you know your table manners, that's a form of cultural capital. But the other way, of course, that we express cultural capital is how we dress. Oh, that's chic, or that's cool, or that's expensive, or that's something else. And these are forms that we express ourselves in those ways. And when you think about how much we spend on that capital, where do we spend most of our money today? We express them in the social, symbolic, and cultural ways. Meaning that the economic side is the enabler of these other forms of capital, and it's described as capital because it's something of worth. So when you have something that is precious, or when you have something that is rare, whether this is an artwork or a cool type of shoe, or whatever that is that you might have, you're expressing something about your own individuality that is worth more than money in and of itself. But how did you get it? Well, you got it through money. And so when you think of that interplay, NFTs represent cultural and symbolic capital far more. Like think about a Bored Ape or a pudgy penguin. If I own one, the whole community gives me a certain amount of respect, for instance, right? And if I've never sold that NFT, then that gives an additional type of reputation that's attached to it, right? And because people see, oh, this guy's a long holder, and he's like, and you can see this today, right? You're a diamond hand if you haven't sold this NFT, or you're a strong member of that community, versus if you keep flipping it. On the other spectrum, though, you have, how do you expand that community? But because it's kind of more of an exclusive club, that's where the more economic and social side comes in, which is basically what tokens do, right? So in the case of something like a Bored Apes, pre-ApeCoin launch, it was an exclusive club. With ApeCoin, they expanded that universe, brought in hundreds of thousands of holders, expanded the brand, and that was one way to do it. And whether you call ApeCoin a meme coin or not, the point is that they've expanded the community, created broader utility, but in a much more economic sense. Meme coins go the other way around. Meme coins start economically, right? People are there mostly for financial speculation at start, having fun and whatever. So but many of them also make life-changing money there. So you've got the economic side that has more of a social, but now they need to strengthen those bonds. Now they strengthen those bonds, which is why they're issuing NFTs. Right. So you see that cycle happening over and over again. And so I don't think of it as a current cycle. I just see it as a sort of repeating cycle in wares, because to be a successful blockchain project, you need all of these forms of capital to embed with each other. If the only reason you're using something is economic, then eventually there is no deeper purpose than just to make money from it. They just extract. And we see this basically what's happening with certain type of L1, L2s. But if having ownership and participation, it gives me essentially reputation, which is cultural, social, or symbolic in nature, then just being there gives me more value, and it's why I'm there. And that's kind of what NFTs represent. And we see this, by the way, also with gaming and skins. We see this with physical items in the real world, and then that sort of nature is constant. So an example I wanted to give here. So I gave some examples where why was Ethereum so big in 21? It was because of NFTs. NFTs were effectively the meme coins. It was memes, just a coin, but it was memes of nature. And the biggest one that was driving that was OpenSea, right? So OpenSea's revenue was super high. Ethereum was super high. It hit almost $5,000, right? And of course, NFT volume was over the roof. And now, basically, you have this narrative moving to Solana with meme coins. Pump.fun basically driving essentially the meme coin narrative mostly. Solana basically at all-time highs, right? So it's actually very synonymous to that. And now what you notice is that these Solana meme coins are now launching NFTs collections on their own, precisely for that reason, right? So we see them very much tied together. And
it's the inverse. The inverse is taking place with the meme coins.
It is. However, what you'll also see is because they built community, and now that you have community, and the big ones are going to start creating more utility on top of it. So expect, for instance, gaming companies to maybe adopt meme coins because they want to access that community, or meme coin communities themselves building gaming applications and other stuff on top of it, right? So, and I fully expect meme coins to be launching L1, L2s at some point in the future as well.
First things first, you mentioned the types of capital. You also mentioned how all of them matter. I would agree. I think the rest of the space agrees. I'm a fan of operationalizing things. Like if I were to say, how do we operationalize confidence? You do it enough times where you become confident, right? How do you, in your opinion, they're all forms of culture, right? How would you operationalize culture for somebody listening to this saying, okay, Yat's mentioning all these culture things. These things mean this. These contribute to these factors. A plus 1 + 1 = 2. We got it. How do you operationalize culture? Because they're all different forms.
Well, so first of all, this was a conversation I had actually on Raw Call, maybe something like 2 or 3 years ago, when we first sort of discussed and debated NFTs at the time. And sort of, I think he came away basically understanding more clearly that essentially NFTs and effectively what tokenization does, it basically allows culture to be a specific asset class. Now we see sort of culture already as a kind of an asset when you think about things like art, for instance, like expensive instruments or expensive paintings, or that's one area of culture. But of course, the other area of culture, which is sort of harder to sort of maybe sort of encapsulate traditionally in value, are symbols, right? Like for instance, the American flag, right, or the Statue of Liberty, right? I mean, these are essentially memes in their own nature. When you see them, you immediately know what it means. But it's hard to encapsulate a value around that because it's never been able to sort of, let's call it, create a financial value, even though it has financial power in a way. And that's actually where tokenization comes in. Because when you start tokenizing something, you actually create a community, you create a sort of attention effect. And really what you're creating is a network effect. And that network effect, which is represented through tokens, then actually creates a type of value attached to it. Now you can turn it into an asset because it has essentially both the property rights and the ownership component, and of course, the direct financial value that you can basically attest to see, hey, okay, this collective community believes that this cultural asset is worth X amount, and therefore it has a certain price point. And that's actually what happened first with NFTs, right? How do I know whether this NFT is worth something? It's not actually based on, what the issuer was. It's actually based on the community, the collectors, the owners who traded amongst themselves and then essentially create price discovery. And now I know the true value of these things, and I can essentially determine that asset value. in the physical world, we do this with like Birkin bags, for instance, right? And Birkin bag has a story around it, and there's only this one person, that made this particular bag. It will take up to 2 years to make the bag, and that's part of the story and the craft. But at the end of the day, no matter the story, it is the market that will determine its worth, whether I will buy it from them, and then when I sell it in the secondary market. And so maybe they can try to sort of manage this a little bit in terms of the supply, so they can manage the demand side of things to sort of give it a certain type of price point. But at the end of the day, it's still the older collectors that give it that value, which is basically what you see from that discovery. So when it comes to the different types of, let's call them cultural assets, I don't know that it is necessary to define each of them, as rather than to say that each cultural asset has a community that it appeals to. So some people love art, some people like cars,
Got it.
some people like what, and what it really does is it basically provides essentially a network effect that's visible within those communities that before you cannot have, but you don't really have a way of attesting its value before. And by the way, that's what I think meme coins are doing.
Yes.
So meme coins are, and by the way, meme coins are taking, meme coins are a form of mashup culture in Web3, for good and for bad. So let me sort of explain that a little bit, I think. So if you remember back in the day, YouTube, when it first emerged, it wasn't actually, many in Hollywood, for instance, were basically just shitting all over it because they were saying, you won't have a production, nobody's going to want to sort of, watch someone just, eat food. So, and it's amateur productions, all that type of stuff. Everyone's basically just saying it's never going to work, right? But then it turns out, not only did it work for like, user-generated content, but actually what really worked was mashup culture. So, and just for people's own reference, we were actually very early. This shows how old we are. This is pre-Animoca. We were one of the earliest investors in a company called Machinima. So Machinima was the first company that was essentially doing sort of YouTube videos, mashing up basically video game content, where they were basically taking video game content and creating basically sort of new kinds of content from it. And basically from that emerged essentially this kind of UGC video gaming culture. But anyway, the point I was saying here is that it is it is now that UGC and user-generated, community-created content is actually what drives the growth of movie industries and other forms of culture content, right? And why? Because essentially mashed up by the community, which is again a kind of network effect. So Hollywood can't have a successful movie launch unless basically you've got viral attention on places like YouTube and on TikTok and on Instagram. And this just doesn't work anymore, right? Because the community is engaged and they feel like they have an ownership in it in one form or the other, right? And I think this is an example where the culture of that comes together, creates a network effect, then essentially brands can leverage. And we see this with meme coins. Like for instance with Chill Guy, meme coin, they just launched a meme coin, and the original creator, Chill Guy, he had two options. He could either say, "Oh, I embrace this and expand his brand," or I can fight it, which is what he's trying to do, and basically sort of slap some kind of IP enforcement on it, which is basically what all the movie companies used to try and do on YouTube until they basically said, what, it's better to work with you than against you, right? So we see actually the same playbook play out, just with more hyper-financification because of Web3, but it's the same thing.
That's very interesting you drew that parallel. Because when I started YouTube years ago, it was just, for reference, I'm 27, it was, we were just kind of uploading anything. It was just like literally, it was literally anything. Yeah, it was literally anything. You've probably seen too, the chart is literally coming up. It recycles every single cycle. The chart that I'm about to explain. It starts with the capital flow of the industry: Bitcoin, ETH, large cap, mid cap, small caps, and obviously the bottom is NFTs. If we were to create that same chart and kind of replace the wordings with the cultures that you've defined, which one do you think kind of starts off as quote unquote Bitcoin and then it bleeds into the other ones? Which one do you think that is yet?
So my viewpoint, by the way, on Bitcoin is that I think Bitcoin is going to be worth millions of dollars, not because it is a sort of currency of any kind, but because actually it will represent the highest form of cultural and symbolic capital. But let me explain that why. Because in order, if you believe that society is going to be much more digital, which Ethereum is going to become, it's already kind of here.
Yeah.
then what's going to be probably the highest symbolic asset that you can have to demonstrate into your someone in Web3? It's going to be that you own at least one whole Bitcoin. And so I think it's not even going to be the Satoshis that will matter. It's more like I have one whole Bitcoin as opposed to I have like
the actual thing.
Of Satoshi,
yes.
right? And I think that I think is what will ultimately be sort of the highest point of value for Bitcoin, not the fact that it's just a store of value, which of course is its biggest use case. People are holding. And the reason, by the way, that it's happening is also because a lot of Bitcoiners, the maxis in particular, dislike altcoins and they think it's dilutive and all that kind of stuff. But actually, I think there's quite the opposite. Because what happens in the altcoin space, when you make money in all these other areas, actually, you don't buy USDC, right? What you do is you buy Bitcoin. So if I've made money on sort of altcoins, I tend to basically want to put it in the reserve asset of Web3. And the reserve asset of Web3 happens to be Bitcoin. And so that's actually sort of fascinating. And some of it a little bit in Ethereum, and it's starting a little bit in Solana as well. But basically, most of it is in Bitcoin. And I think Bitcoin will never lose that position. So Bitcoin kind of sits at the top of it and enables the rest of the segment. Because basically, if you start making money in Bitcoin, there's also leverage and so on. Then actually that trickles down into the rest of the industries. And I think but by the way, I don't believe, for instance, that NFTs are at the bottom. They may appear to be at the bottom because of the fact that they have the least liquidity. But when it comes to its symbolic and cultural value, they're actually above all of them. In the sense that they represent something.
But the rotation
precious.
of capital is at the bottom, though, right? Yeah. But the rotation of capital is at the bottom, but symbolic is at the top.
Yes. So the economic.
Is that fair to say?
Yeah. So the economic is the base. Let me just sort of maybe think of that from a human perspective. At the end of the day, once you have a certain amount of money, what is it that you actually seek? More money, or do you actually seek something more? Right? Flex, social status, symbolic status, cultural status. Right? These are the things that matter. Which is why we suddenly pay a premium for living in a certain district, whether this is Atherton, or Beverly Hills, or Manhattan. Doesn't really matter. We start paying a premium when literally like 10 minutes across the street, you can get a bigger place for like, maybe 30% less, but you want to live in that district because it is around that sort of cultural and symbolic set. It's also the reason why, people are so obsessed about getting into the right college, because getting into the right college isn't necessarily, and I think the stats show that undergraduate education between, the top 100 or top 200 universities really don't make a big difference in terms of academic and work outcome. But there is a flex to say, hey, I went to Harvard, I went to Stanford, right? And again, that's all symbolic and cultural because it means something in your societal area. And also think about how we define, for instance, wealth. So when someone has $1 million, so you're a millionaire, it's great. But if you have $3 million, we all know that the difference between $1 and $3 million is 3 times more, which is quite substantial. But you're still a millionaire, right? You're not a 3 millionaire or 5 millionaire.
You're not a billionaire,
you're not a gold star millionaire. It's kind of interesting how we then start defining them as, but you have to be a billionaire next. What happened to the other people who like hundreds of millions? Why are they just all just millionaires, right? So what did they do? Well, I want to distinguish myself because humans are about individuality and they want to express themselves away and show that they have a certain type of social status relative to others. They start buying art and they start buying luxury goods and they start sort of doing things or going on crazy travel and that kind of stuff as a way to, again, demonstrate who they are. Right. So that's why I think it's, the ecosystems that ultimately become the strongest ones are the ones that have the deepest cultural network effects that are basically cultural, symbolic, and also social in nature. And I think this is the part where you think about the economic spend. Just tally up, what did you spend on in, let's say, the last 3 months? And it turns out that you probably will have spent mostly in culture. And I don't mean culture like going to the movies or watching theater play, but I talk about culture about the clothes you're wearing.
Yeah.
Basically the things you wore that give you kind of status, right? These are the type of things.
Yeah.
And so one of the expressions that we used to give early, and we still do it sometimes, is, we describe culture as the deepest TVL of any economy. Because essentially it's the kind of spend that you put in and you never take out because they mean something to you. And we can see this a little bit with NFTs as well. All the guys who maybe had a Bored Ape as an NFT and put it with GIF, when they sold it, they always had to give this big sob story. I'm really sorry.
Yes.
My
I need the money from my parents and school.
All sorts of stuff, right?
Yeah.
But if I basically, made a bunch of money, meme coins and just sell it, everyone's like, score, just go for it.
Take it out.
Doesn't really matter.
Just take it out. Yeah.
Just take it out, right?
Yeah.
So it's a completely different culture.
Yeah, there's
mindset. But
almost
what-
there's almost a factor of like public humiliation here too, to your point, because like they have to remove it from their profile picture, and it's kind of like I step down from my job type thing, but it's I step down from a social group type thing. Does that make sense?
Well, it's like
It's almost like public humiliation in some form.
it's actually more like a betrayal, right? It's like you betrayed your community.
Yes.
Right? And
It's public betrayal. It's public betrayal.
It's public betrayal. And actually, and this is the thing about us as humans, because we're social creatures, it's essentially you've lost a part of your social identity. And by the way, this is the thing that, when you think about sort of humans.
Celebrity breakup. It's a celebrity breakup.
Yeah. It's a celebrity breakup, but it's also community breakup. And just think about in your own circle, how hard is it to leave your community when you're in it? Right? So there's different levels, right?
It's tough.
But just think about if you left your family, oh my goodness, right? If you left your friends, it's tough, right?
Yes.
And actually you get it even to if you leave your country, right? Or if you leave your city, right? There's an element around that as well that's painful because you've built your identity, your connections, because all of your symbolic, cultural, and social capital is embedded in that environment, and you're starting afresh. That's also the reason why, for instance, for immigrant families, many of them, China has, actually other places have this example where you could see disaster coming back then with the Cultural Revolution. Or for instance, I'm a little older. So, back in the day when the Berlin Wall was being erected, I didn't witness that, but the stories were, before the wall was erected, anyone could just go from east to west really easily because there's no wall there, right? But despite all the warnings and so on, everyone's just like, well, I don't want to leave the eastern side. Why? Because all of your cultural, social, symbolic capital was tied into that area. If I had left that area, I would lose that. That's the immigrant story, right? And, do you want to be a doctor at a low-paying, less beneficial place somewhere in the rest of the world? Or come to America with your PhD and literally clean the toilets. That's the immigrant story, right? And so you have to make this determination. Economically, I could make more in America and maybe have potentially a better life, but I would be at the bottom of the social tier, perhaps for most of it, right? And that was a price too much to pay for most people, and they didn't immigrate, and then they stayed in their countries versus the ones that did to try to, in the hope of building a better life, right? So it's the same thing. That social, cultural, and symbolic capital is far more sticky, far more powerful. And in fact, those cultures that have it also have the highest sense of sort of loyalty, call it patriotism, call it nationalism, to their own particular environs. It's the glue that holds society together.
And you've probably seen this a lot of times too. There's the guy or the gal or the girl where they buy their first like watch, and it doesn't have to be a Rolex. And you'll kind of notice that there's like immediately right after the purchase is a bit of a kick in their step, and the watch or like the ring or like, let's say the purse will walk into the room before they do. It's the same thing. Like the Rolex will literally enter the room before the human being does. Like he's walking in like this with his arms stuck out. It's the same thing.
Yeah, and it's also the classic thing. Exactly. And I think, by the way, this is what a lot of sort of, I guess, more utilitarian sort of people in the blockchain space seem to miss the point, which is people don't buy a Rolex to tell the time. Right? Exactly.
Correct.
So yeah.
Correct. And then, I want to ask this, like, I want to put these numbers in front of you and get your take on this. Sure. So the highest NFT index this year happened in January. So like literally 12 months ago. And the point grade was 1900. Okay. The previous all-time high from the last NFT cycle, like the highest index from last cycle in 2022 was over 8,000, 8,462, whatever. According to the index, the bull market from like that time leading up from that lowest index point to the peak index point. And for context, the index is measured based off of market cap for the assets that are included in the index in the index. And it took about 6 to 7 months for it to kind of the top out. And the top out phase for the index from the 8,000 I just mentioned occurred in May 2022, but the index started trending on a massive upward scale December 2021. So it took about 6-7 months. And then obviously after, May of 2022, there's kind of a slow decline. And like you always kind of go through that phase where you think they're like dips, but they're not actually dips. The cycle's over. And trying to time the top is nearly impossible. So don't recommend people doing that. That's not the point of the question. yeah, do you think we see an accelerated NFT cycle that lasts about 6-7 months, or do you think we see something that lasts a lot longer? What are your thoughts on the cycle top here for NFTs specifically?
So first, if we go back to 22, we need to determine basically what were the events that actually created that. And what created the downward cycle on NFTs wasn't a specific NFTs, it was just crypto broadly. And first was Terra Luna, which basically happened just shortly after, around May of that year. And of course, FTS basically, around November of that same year. So we've had two major cataclysmic shocks that, and but it's not just NFTs. I mean, Bitcoin at one point went even below $14,000, during that cycle. Like I think maybe, I don't remember if it was like late 22 or like early 23. Anyway, the point being, right, the whole industry was somewhat in disarray. And it was definitely sort of, the difficult times and fairly dire straits for the whole industry. And so this is the thing about where the NFT projects, particularly in 21 and 22, they were mostly Veblen goods, as in they were status goods and culture goods. And that meant that, of course, like in any cycle, when the economy is down, right, then, you go back down to that sort of survival area. And the survival area was your economic capital. So, which meant that you basically had to sell everything to make sure that you at least had the base of your economic capital taken care of. Remember, macro as well. This whole stock market did badly too. There was war, in Russia, Ukraine, right? There was a crisis around the world. Like it wasn't exactly sort of roses in the rest of the industry as well, right? So basically, all of that caused essentially sort of the cycling of assets around, basically trying to get as liquid as possible for survival reasons. So that was the event that happened then. And this is basically why I think NFTs has struggled and suffered the way that it did. Now, what's interesting is that right when meme coins started to really accelerate, actually, when wealth was generated from those meme coins and other tokens and the price rises in them, actually the NFT collections, particularly the OG ones like CryptoPunks and Bored Ape, they started to really accelerate in value as well. And the reason that happened is because, people who started making money started to want to roll and cycle it into essentially the kind of cultural symbolic assets that might give them better returns, but more importantly, actually it was more about them having status items that they couldn't afford before. And the same is true for Bitcoin. So I would say that actually that cycling is already beginning in the early stages. And the difference between what we're seeing today versus before is that I don't foresee, not would of course, that there is a Terra Luna or an FTX type scenario that is likely to happen. So imagine what the industry would have looked like if those two events didn't happen in 22. There would be macro events like, the wars and so on, but there wouldn't really be that type of cataclysmic effect, which then therefore wouldn't have given it that sort of a hyper negative scenario, because it was something that sort of decelerated the way that it did. I remember, back in the days of the .com boom, because, and now I'm really like dating myself, because that was like in really the year 2000 when that basically all blew up. All of those founders at the time and entrepreneurs in the space, they all had to sell their fast cars and their watches and everything, right? And there was a general decline in luxury goods. And not that long ago, when China basically sort of was sort of going against basically people, sort of owning and buying these type of luxury goods, the entire luxury market also went for a major dip as well, right? And prices and so on started to come down too in certain areas. So I think this is just a natural cycle. But when there's a general bull market economically, that's actually where NFTs do particularly well, because those become the cultural status items that you want to basically buy into when you've made sort of wealth and success in the other areas, right? So I think of that as something far more fundamental. So I think NFTs are actually going to rise. I think the index will sort of grow from here significantly, not because of new NFT projects per se, but because of the fact that more wealth is going to be generated, particularly under this new administration and the growth cycles that we see in Web3. And then they're going to want to own these type of valuable cultural and symbolic assets.
If not now, then in a couple of years, I do believe that the NFT market specifically has formed a bit of a monopoly when it comes to, I guess, the best brands in the space versus the ones that don't. Inevitably, every industry at some point does monopolize. The podcast industry has done it as well. I don't remember what the exact numbers are, but the top 10 podcasts, in terms of percentages, the top 10% get the most views, most sponsorships, most clicks versus compared to the rest of the other 90%. Our industry will be no different. We'll see that probably in the next 2 decades to be very, very conservative on that take. And I want to pivot the conversation over to you, Animoca, everything you've done in your career. Obviously, you've probably been asked this 1,000 times, kind of the story behind this. I want to know from your perspective, do you think you could do it again? The way you guys scaled Animoca, the timing of it, the pivot from the business before to the new one into digital assets. Do you think if you had to do it again, you can do it again in terms of like the I guess the skill of what you guys have gotten to as a collective?
So I would say I don't know that we would be able to do it in the way that we did it because the markets were different. We got into the whole space really in late 2017, early 2018. So we missed the entire ICO stuff. In some ways, it kind of was a blessing. So we got into the market when Ethereum was below 100 and when Bitcoin was like, maybe $3,000, right? And that's not because we bought necessarily just those assets. The fact that we were basically at the bottom of that particular market cycle. So for us, generally speaking, that's why when we see, so-called bad market, we're like, well, did you remember 2018? Right? It's like, so, when you've gone through essentially sort of, the worst of it, as it were, then the other things that appear bad aren't quite as bad and you kind of set up for it, right? So that was kind of part of it. And so, I'm not saying it's too late, but it's the strategy that has to change because when we really sort of bet on gaming, because that's our background in the metaverse, in 2018, people didn't like NFTs at all, particularly in our industry. So the people in crypto in particular were anti-NFTs, right? And then the second thing was that they didn't understand gaming. So they were all like, gaming, what's that? That's like for kids, right? So we had the biggest resistance from people within our industry from 2018 up until 2019. The whole narrative, where it was about Web3, gaming, and NFTs, that really started in 2020. Like, let's call it second half of 2020. It's kind of really where that emerged. And then started to reach a kind of fever pitch around, let's call it sort of, mid 21 to basically early 22, right? That was kind of what happened. And we, and so it took about almost 3 years, right, from when we first started to sort of get to that point where people started to realize, oh, that's something. And that is to say, therefore, that it was really easy for us to get into those great deals because nobody else believed in them except us and a few others. So, we were, right? I mean, we were like, it was, I remember when we were, one of the first, maybe the very first NFT conference, Nifty in Hong Kong in
Nobody was thinking this way yet. Nobody was thinking this way back then. You guys got early on it.
We got early on this one.
Yeah.
And so the valuations are tiny. I mean, when we invested in Axie Infinity, we led that round. That was an $8 million valuation. 8. Okay. When we acquired Sandbox, we bought it for $4.5 million. $4.5 million, wow. Right? And now it's and even today, it's like a $2 billion token, right? Whereas at one point it was, of course, higher. But my point is that, these type of deals you don't get anymore because the market's more mature. And that's normal, by the way, right? It's kind of like, if you got into internet companies, in the mid 90s, or if you got into Amazon as a seed investor, right? And, when we invested in OpenSea, it was like a $15 million valuation, for instance, right? And even our investment in Magic Eden was the token did really well, but it was well below, right? So that's kind of where, we get our sort of 100, 200 X's because we basically bet early in the cycle, but it's thesis driven, right? And we believed in digital popularizers, believed in NFTs, which is why we invested in like the OpenSeas and the Magic Edens and the Axie Infinities and the Sandboxes and Decentraland, all that kind of stuff, because we really believed that was a narrative that made sense to us and that it could grow the space, which wasn't that obvious, right? So it's finding the non-obvious narratives to get into. If you want something more stable, sure, there's L1, L2s, there's Bitcoin, you can go into those, but they're not going to give you the same kind of return cycles, which is fine if that's what you want. But if you're looking to your question, if you're trying to build out Animoca in the way that we did back then, we would probably have to find the growth areas that are outsized in a manner that is not understood or not seen, right? And that's, by the way, what we're doing right now in new areas on things like digital reputation and education.
DeSci? DeSci?
Right? So DeSci is
Are you guys touching DeSci at all?
Yeah, we're touching DeSci with Open Campus, which is basically on the education side.
Yeah.
But DeSci to me isn't like gaming in 2018, 2019. Gaming in 2018, 2019 was completely unheard of and broadly misunderstood. DeSci is not misunderstood. Maybe it's not well understood, but there's a potential because DeFi in itself has a mimetic nature. Science, even though it's obviously scientific, has a mimetic quality in terms of it because of the fact that it's something I've heard, or it's something, there's a cultural artifact that's attached to science in the same way in other areas. So within the industry, people are like, hey, what's the next narrative that could do well? Oh, it could be DeFi, it could be this, whatever. The reason, so I would say it's not in that cycle as it was before, right? Like, whereas in our emphasis on education, for instance, is that, we know it's a $5 trillion space, and yet it's something that is broadly ignored by almost everyone. And so if we want to see the kind of outsized bets, maybe it could be in education. We'll see, the proofs in the pudding as to whether that's going to work in the way that we expected. But that's actually what we saw in gaming, because again, gaming in Web 2 is larger than movies and music combined in terms of cultural artifact. Appeals to 3 billion users. Is like a $300 billion industry. So the narrative and the idea that gaming would be big in Web 3 seemed to make sense to us, at least, and so we would back that as a concept. And that's why we ended up making investments in hundreds of gaming companies on top of other things. Because in the space, of course, you can't fully know which ones are going to win, but the great builders, and hopefully you can back them and see hopefully some success along the way, which we've been fortunate to have had.
On the education topic too, I told this to Jake when him and Shan were on, I think about a couple months ago. Harvard and some of the top institutes in America from an education standpoint, literally just from universities, have more actual dollars, as in like hard cold cash in like reserves, bank account, vault, whatever you want to call it, than some of the biggest brands and enterprise companies in the world. It's insane. And I didn't know this. I was listening to a podcast like a couple of years ago. It was during COVID. And Patrick Bet-David, PBD, said on the podcast, and I was like, that's nuts. I didn't know that was the case, but like now learning that 2 years ago, it's a business. It's a business, as it should be.
Yes, but
I believe in capitalism. It should be a business.
Yeah. But imagine this, right? So it is capitalism, but in the case of these education institutions, they should be purposeful capitalists. And that's actually the role of the endowment. Because at the end of the day, the funds that grow from the endowments is what furthers science and development and research. And, one of the things that we hope to solve with Open Campus and EDU is that if you have a large enough endowment and you can create the kind of yield that you can do, that actually that can help finance essentially education or give scholarships to do other things in an area because of the profit that's generated from it. That's purposeful, as an example, right? And that there's meaning behind that. And that's, by the way, how the universities fund their scholarships, because they make profit on the endowment and then they do that this way. Whether they do it enough is a question mark, but the fact that that's the capital pool that they're reaching into. And that's why, the average well-endowed university has billions of dollars of assets. I mean, that's already large. And the Harvards and so on, like 40 or 50 billion. I mean, it's insane amounts of cash that these institutions have that aren't really maybe doing more than it could. But again, this is the opportunity for Web3 and blockchain.
The killer too, to add to your point, it like I am all for making money. I think everyone should make as much as they can make depending on skill set. I think you're entitled to it. I think you should do it. It's great for economy. I can list a bunch of different things as to why I personally think it's great. The killer for the institutions from an educational standpoint, the capital is not even rotating. It's just sitting. Like it's just there. Like it's not like it's moving. It's not like it's flowing anywhere else. No, the capital's just sitting. Like it's literally just accumulating as if it's a bank account. It's quite incredible. There's a quote that I think I had pulled up before the show that I don't remember who said this, but it was one of the better investors, worldwide. It's not inclusive to crypto investing at all. And he says, raising money is a good way to learn the weakest parts of your business plan. It's like free consulting. You've done a lot of investing with Animoca throughout the years, and obviously still to this day. And Open Campus obviously is a part of that process as well. What are the 3 things that you guys look into a company for, at least from the crypto standpoint, of whether you're going to deploy or not deploy?
There's a lot, right? And to date, we have over 540 portfolio investments. And so when we add all of that together, we've had many lessons in that. Also, obviously, we've seen many sort of opportunities. And I would say when it comes to the lessons, well, first, I wouldn't want to focus on the things that are obvious. Like, are you trustworthy? Do you have a good reputation? Do you know how to code? Or like, I'm being on basic stuff, right? So let's take away those things. So then we try to look for the understanding and the alignment. Because we're not a typical VC in the sense that we don't really run a fund. So most of the investments have come out of our balance sheet and they accrue essentially into our equity. So it's been different from a fund, which is like a 5-year, 7-year type life cycle. We do have a small venture fund, but the lion's share, like let's call it 95% of our investments all come out of our balance sheet, which means we can take a much longer horizon in terms of the investment framework. So what we look for? Well, we look for alignment. Do you believe, as we do, in where Web3 should go? We have certain type of philosophical beliefs in it. Like, for instance, we think that it ought to be a shared network. Like, if you're a very zero-sum thinker, then, maybe you're not the right kind of person to work with from our perspective. But that's not to say that a zero-sum business plan can succeed, as it has in Web3, but it's something that we think of ultimately becoming more extractive and therefore not conducive to at least the type of ecosystem that we want to build, right? And that's actually where we start looking at are you this kind of builder that works together? Are you sort of thinking collaboratively versus, more competitively? Again, you need to have a healthy streak of competition. But, if you're doing it basically to try to become a monopoly, then we actually think that that's actually a negative, for example, right? And that's a thesis direction that we have that may or may not fit with the perspectives of some people and maybe even some investors, but that's kind of our mindset. And then part of that comes down to the understanding, particularly when we talk about crypto. Do you understand what the network asset is in question? And this is a hard lesson that we learned ourselves because, Web3 and tokenization, we've now come to the view that we think of them as network assets that are containers of network effects. And that was an understanding that we didn't really have fully, let's call it 6 years ago, right? It was something that, we, I guess, maybe intuited, but we didn't really understand it as that. And that's actually one of the reasons why, when we talk about some of the investments that didn't work out so well for us, we ended up investing in a number of gaming companies that really treated tokens as just a fundraising mechanism, as opposed to essentially giving out essentially a part of the network. And that is the point. If you basically give a token or an NFT, both of them being token and essentially network assets, you're actually building a community to build a network effect, as opposed to sort of monetizing it. But in the crazy days of 21, many of these projects simply said, hey, it's an undiluted way of raising, capital. But actually, it's completely the opposite. Yeah. You're creating a liability when it doesn't work. And actually, you're issuing a token as a formal liability towards your network, which is an asset, which was never really viewed as an asset class, really until, let's call it recently, right? Because there was no category of what is a network asset, because it's kind of like, weird and ephemeral and you can't really touch it, right? But actually, that's what a token is. It's a network asset. And it represents basically ownership of a network. Whether this is Ethereum, whether it's Bitcoin, whether it's Sand, whether it's Mocha, whether it's Pengu, it doesn't really matter. When you own that token, you're part of a network and its value comes from the network effect. Right? And so these are things that we had to learn ourselves. And then we had to sort of explain to those founders, do you really understand that? Or are you just saying that, right? And bull markets are always harder to determine because in bull markets, everyone will just say it. If the capital flows very easy. Whereas in the bear markets, that's the best time to do it. So if you recall, not just in 2018, 2019, actually in 23, we probably were still the biggest investor in Web3. And that was a pretty big bear market for most standards. And yet we still continue to invest precisely because the kind of founders who would continue to build on that in that era were actually the guys who were here for the long term and had a bigger, deeper mission and purpose behind it. So, these are some of the parameters we'd be looking for.
I've asked this question to Robbie when he was on as well, and I do want to get your thoughts on this. It's something that I just kind of like ask myself sometimes. I just kind of need to think about it because at some point, after enough episodes of the podcast, selfishly speaking, we probably would have interviewed, thankfully, gratefully, and all that stuff. Probably some of the biggest people I think worldwide. If Web3 follows the same trend as the other, I guess, webs have in terms of like some of the biggest, companies within that time period ended up becoming some of the biggest companies in the world and now probably have monopolized certain portions of the world or have monopolized the entire world. Google is obviously the most well-known example. Facebook is also the most well-known example. Do you think some of the companies within Web3 right now that are currently building or going to become building here very soon, if not already, will be some of the greatest monopolies worldwide and not just some of the greatest monopolies kind of, I guess, in the space? to where like at some point, I don't know, like Pudgy Penguins is, I don't know, it's Marvel or it's Pokemon in terms of valuation. Like it's not just big in industry. It becomes something more similar to some of the companies in VC firms, Animoca, Mochaverse, all that stuff.
So first, I don't believe that there will be true monopolies in Web3 because that's essentially the whole spirit of decentralization. So if you actually successfully decentralize a network, then you've essentially successfully demonopolized the framework, right? I mean, that still goes on theory anyway. And so we don't believe that's possible because the permissionless nature of Web3 allows for liquidity to sort of travel everywhere. And therefore, while you can have a very strong and powerful network effect, actually what happens is that they actually accrue to the rest of the network that are also permissionless because you can always build on top of them if you wanted to. Meaning that I could essentially sort of, I could vampire attack this community. I could basically sort of, build on that platform. And if there's something new that's building, and we saw this, by the way, with L1, L2. So, L1, L2 launching, let me move my liquidity there, for instance, right? Or, I got this NFT, let me add rubber stuff to you over there. Or, I run this NFT marketplace. Oh, look, there's Blur and there's Magic Eden. And hey, we give you incentives if you actually use our product because I can see all of that on chain. The way that network effects have been monopolized in Web2 is because of walled gardens. I can't access and know what the Amazon customer is purchasing. I have no idea what someone is doing inside Apple or Facebook or Google. This data is not open to me. So they close network effects. And so in order for me to use the platform, I'm actually renting their network effect. Like if I want to have access to the Apple platform, not only do I give up 30% of all my revenue there, I also have to follow all their rules, which they can say at any time, by the way, I don't like what you're doing and you're gone, which is what happened to us, by the way, right? So that's actually one of those sort of examples where that's why they can be monopolies, because the frameworks around them essentially are built upon this monopolistic practice. But in Web3, can you monopolize Ethereum? Can you monopolize Bitcoin? In fact, if you end up monopolizing them, the value of the network goes to zero, right? If the hash rate in Bitcoin was owned by one company and really controlled it, Bitcoin would not be nearly as valuable as it is today. If Ethereum was basically run by a single staking node, it would not nearly be as valuable, if anything, because of the fact that there wouldn't be enough incentives and enough of a network that would want to uphold its value, right? So I think, and then when the network is that decentralized and permissionless, then essentially it's subject to other people building on top of it. And I remember back in the day, I was talking about Ethereum killers, right? This was like in 2018 and 2019. Every L1 and even L2 was like an Ethereum killer. And actually, as those L2s started to grow, actually so did Ethereum, right? And again, it's the whole permissionless sort of network effects and the sharing of those network effects that take place that actually grows the entire network. Right? And it's the same thing when I mentioned earlier about Bitcoin. Actually Bitcoin grows because of altcoins. It doesn't grow because of people only buy Bitcoin. It's the wealth that's generated from altcoins that then goes into Bitcoin, for example, right? So it all sort of fits part of that same type of sort of framework. So in sort of,
do you believe?
Sorry, go ahead.
Do you believe that the same is true for the products? Like in some weird simulation of the world that we're in, that like MetaMask or Phantom or literally whatever it is ends up having more users than, let's say, like Bank of America. Like, do you think, like, from a custodial standpoint, like not just the chains itself, but the products that are building on chain or off chain, could they at some point grow so big that they become the next iteration of Google, Microsoft, browser, whatever it is? Like, it's like, chain aside, you think it's possible?
So let me just maybe illustrate our general belief, which is that we believe that community-owned platforms for networks are going to be bigger than any company in the world. So in other words, we think DAOs and blockchain networks are going to be bigger than companies. So if you look at Bitcoin, second largest asset in the world, maybe 6th or 7th largest company, if it were a company in terms of market value, sort of this early in the stage, right? At roughly $2 trillion. So imagine that, right? Like, who runs Ethereum, right? At $400 billion. Or who runs Bitcoin at $2 trillion? It's a network, it's a community, it's the people that own it, right? And so the way that we think about it is that if that's what we believe. So if that's what we believe, then how do we want to play in a market where that's the future? And why do we think that's the future? Because it's the only framework where billions of people can be included. Because the current frameworks, millions of people can't be included. Like Apple doesn't have 100 million shareholders. It has like 80,000 shareholders. And if it had millions of shareholders, they couldn't manage that. It just doesn't work the same way. But you can have a billion token holders, for instance, right? You can have, millions of Ethereum or Bitcoin holders. Like you can do that and create these type of network effects and community effects that you can have. So that's our general belief. And so I would say that the way to play this is to say that, like a MetaMask or Phantom, these are valuable products that help build these networks. But at the end of the day, they might launch their own token to build a network of their own. But because it's permissionless, they all become ways in which you can target each other. And by the way, that's not to say that these can't be billion-dollar enterprises. They absolutely can, because in blockchain and tokenization, you're actually creating a network value and demonstrating the network effect value, which you couldn't do before. It's an asset class that didn't exist before, but it was always kind of there, right? And so I would say that the way that we should think about this, and at least from us as a company standpoint, is we want to own as many of these network assets, which is why we invest as heavily as we do, and basically have stakes in all of the biggest L1, L2s, as well as basically the gaming projects, big and small. Because and also we can't have a controlling stake in that. Because if you have a controlling stake in that, we actually would do the opposite.
It's the same model.
Exactly, it doesn't work. Yeah. And so there was someone in our office that actually sort of tried to describe Animoca Brands, and it's not quite true because we don't have the same strategy, but it's interesting as a model because it's kind of fashionable to say it. And they said, "Oh, Animoca is the MicroStrategy of altcoins," right? And it's an interesting way to think of it. Because, we have, hundreds of tokens in our portfolio that are worth billions of dollars and growing. Plus, out of our 540 portfolio companies, we have hundreds of more projects launching, which we basically accumulate tokens, and we generally keep them and use them for treasury, but we're not a VC, so we're not a fund where we have to sort of, liquidate to give to investors and that kind of stuff. So we are sort of growing, accumulating network assets that we think will be very, very valuable in the future. And so we as a company would basically be a representation of that. But would we be a monopoly? No, because we can't monopolize any single network. Rather, we're sort of aggregating all this network value into an entity, but our influence in them is going to be as a major player, as an influential player, but not as a controlling player. I think that's the point here. Because to be a monopoly, you have to be the controlling player. And I don't think that works.
Controlling, correct. Yes. I have two more questions. The last one's going to be a very tough question. The first one, it can be quick yes or no, just for time's sake. Have you guys ever invested in podcasts before or have any stake in any podcasts, just from a podcast network standpoint?
Yeah, I think we have. But it wasn't really specifically just in podcasts. It was more like, venues and events and their broadcasting. I think we invested in a company called Edge of NFT and maybe a couple other ones. I guess Forecast Media, which is now part of Crypto Slam.
Oh, so there's more.
But we did that because, when we think about investing, we also think about it from an ecosystem standpoint. So it wasn't that we necessarily felt that these were the biggest investment tools ever. It was more about, hey, we need to invest in platforms that can help grow, discussions around NFTs or grow in sort of the indexing area. And, what was Crypto Slam, and still is. Crypto Slam is your NFT index and sort of those media interviews and so on. And out of now call, I think, the Edge of NFT guy basically started running events, not just in LA, but actually in Saudi Arabia and all these places, and getting sponsorship and in a way to proliferate the industry as a whole, right? So it's not only looking at it from a perspective of what gives you the best return, at least from our vantage point.
That's a good take. You won't hear many people say that at all, which is a good take. Yeah, I have a last question. It's very, very, very tough question. Hopefully you can get this one right. Very, very tough. What do you do in your spare time? What do you do for fun? What do you do for fun?
I mean, I think there's a lot, and to the extent I have time, I play video games with my kids. I like to play a lot of our games, or games we invested in. I used to play every single game that we were involved in. It's kind of hard to do that now. I just don't have the bandwidth to do it.
That's cool. Yeah, that's cool.
Yeah, I also I do have a great interest in I buy a lot of NFTs. I mean, that's something that probably people know when they follow my word. To me, it's kind of similar to collecting a sort of artwork. So I don't really collect art per se, but I do, for instance, like to collect sort of rare inks as an example, and stuff like that as well. And again, and so part of that essentially is my personal interest in sort of reading. I do a fair amount of reading, which informs me. I used to study history as well as before. So these are things that interest me as well, because there's a lot of lessons that one can see in how the world is run today based on the lessons of the past, right? So stuff like that kind of inspires and interests me all the time. And of course, otherwise, one have to hike, and so on to the extent that I have time. So I used to be really, really avid biker, but again, not having quite the time to do this often as I'd like.
What's the one thing that you do that you kind of lose yourself in that's not work related? Like where you're doing the thing and you kind of forget about everything else and you're just there hyper focused for like an hour, 30 minutes. What's that one thing for you? I'm just curious, to be honest.
Yeah, but I would say I am deeply interested in topics that help sort of, I guess, bring a degree of human understanding in some form. And that, by the way, doesn't have to be just like philosophical text, but it can also be things around science, right? So for instance, there's a deep interest, for instance, in things like quantum mechanics and quantum physics, because I actually think it does unlock some ideas about who we are, not only specifically around the science around it, but determining something around sort of, our consciousness, for instance, and how we think and what's the state of the world. And, I think a lot of people sort of were caught a little bit off guard most recently when Sundar was basically describing sort of their progress with quantum computing and with what they're doing with qubits.
Yeah.
And a lot of people were, and this is known to people in quantum that actually quantum computing is probably, in order to really understand it, is to kind of take the perspective that there are effectively, parallel universes. And that perspective, when you sort of say it to someone who hasn't looked at it before, it's like, that's just like nuts. What the hell are you talking about? We're not in the Marvel movie yet, right? But actually,
does it worry you though? Does it worry you? Does like Willow and Google, like the whole quantum computing, does that worry you at all from like a crypto standpoint, Bitcoin standpoint?
I mean, I think the classic thing around sort of quantum computing is, that what it can do for encryption or decryption in this case, right? And so there's a big sort of question mark as to can they basically sort of crack the encryption, and there is a risk for that in sometime in the future. But I think to me it's similar to Y2K in the sense that the same technology that is a risk is also the same technology that can actually protect us.
Ooh. Yeah. In
order to basically get a form of and a lot of people are already building around quantum proofing, which is mostly theoretical, of course. But the whole point about quantum proofing is that you can basically use the same technology to basically protect, right? And I think we'll get to that point because the vested interest in making it work is so tremendously large, right? And that's actually what's so great about capitalism, which is that if there's enough money at stake to solve it, there will be a solution, right?
Yeah.
And I think historically
there will be a solution.
Yeah. And I think, and by the way, people used to doomsday about Y2K and they used to doomsday about all that stuff. And then it still happened. Why? Because too many people basically had a stake in making it work. And I think we'll see exactly the same thing happen here.
Because I saw some chatter quickly on the timeline the past couple of days, as you probably did too. And some people were in panic mode about Bitcoin. I got some couple texts too. I can imagine you probably got 10 more times the amount of texts that I got that were worried about crypto, their seed phrases and all that stuff. And I said, guys, listen, I don't know what the future holds. I don't understand this stuff specifically. But I literally told them what you told them. I said, if there's invest enough interest, money behind it, they'll fix it or they'll improve it or they'll secure it.
Yeah.
Whatever.
And that comes from the perspective of, where I like to come from a lot, which is to try to understand human motivation, right? Which is why we focus on philosophical context as well, and where we talk about essentially sort of human desires, because I think the solution of many of these things that, yes, if you look at technology and snapshot it from the time it is today, then you can say, oh, it's doomsday. It's kind of like talking about sort of the environment as well. It's controversial to talk about it this way, but do we really believe that environmental technology is not going to improve enough at a point where that doomsday scenario is supposed to happen, that we won't have better technological approaches because actually we have enough vested interest in making work? And that's also what people used to say about population growth, for instance. The population growth basically kind of solving itself, that where the developed nations basically have essentially negative childbirth rates because they reach a certain type of state. right? And again, when you look at the projecting childbirth growth as a constant 30, 40 years ago, you go like, oh my goodness. But then actually where it is different again, right? It's like trying to measure essentially carbon emissions from when the car first was created back in mass production with the Ford Model T, at the turn of the century, and say, hey, that's the carbon output. We're going to be basically toast, right? Without making any regard of the progress that we've made again. So again, I would say that there is, I'm obviously an optimist in this, but I think it's had time and time again seen that sort of when the incentives are there, the solutions will come purely from, the incentives as a human.
I'm going to be honest. I could go on for another 2 hours, but I don't want to keep you at all with your day. I assume it's late there, right? It was like 1 a.m.
I'm in Dubai, so it's more like close to 11 p.m. But yes, yeah.
Yeah, it's getting late. I can go on for 2 hours. I don't want to feel like being rude to you. I feel like I want to wrap this up. I can go on for another 2 hours, but I want to be respectful of your time, obviously. I'm sure you have a family to attend to. It's like 10. Yeah. Do you have any final things you want to say? Let the people know about where to follow you, all that good stuff.
Yeah, I mean, generally speaking, I do sometimes write on my Medium sort of blog, but generally speaking, Twitter is the best place to find me, which is basically, YSOU on Twitter. And I'm fairly vocal over there. So, follow me there if you're interested in learning more about stuff. And I would say, maybe I'll close it with this thought, right, which is around, our views on Web3, which if you haven't seen me talk about it, I think is worth reiterating. Which is one, I do believe that, Web3 is bigger than just, digital assets. Like it's this idea of digital property rights is actually the foundation of property rights today in the physical world, which is that only through property rights can you actually have freedom, and therefore also really the foundation of what we describe as a truly democratic society, right? Because if you don't have the ability to own your own property, then really you don't have the freedom to do things with it. And the basis of essentially where most of successful democratic societies have been built upon. I think we all sometimes take that for granted. And that's actually now possible in the digital world through digital property rights in Web3. And we believe that that's also the formula that will really save the capitalist narrative. Because the fact is that in Web2, capital value and the assets of the Web2 companies have become so centralized. Like who owns OpenAI, right? Or who owns Google or Facebook? All these companies, basically institutions that basically control our lives because they sort of own everything there because they own these assets. And, antitrust has failed. So you can't really break them up. So what's the solve? Community ownership. And how do you get essentially millions of people to own these type of network assets? It's really only through tokenization, right? And I find it always crazy to think that how many people use Apple products, and the people who use Apple products, how many of them are actually shareholders in Apple? It's not even a correlation. Not even a correlation between, right? Whereas in fact, actually it's you, the buyer of an iPhone, that is actually giving value to Apple. So why shouldn't you be owning a stake in the very business that's growing that? And I think that's the basis of what we describe as stakeholder capitalism. And that's actually what we think the future will look like. And it's just a better future, which is why everyone will go towards that. And that's actually the higher purpose and mission, we think, about Web3.
That is a mic drop, if I've ever heard one. Yeah, once again, for the 10th time, we appreciate your time. Everybody give Yat a follow on social. Even follow his articles. I believe he does write with Cointelegraph and a few other publishes his own stuff too as well. He published one very recently about Web3 gaming, I think about 4 or 5 months ago. It's definitely a fascinating one. Includes some data as well. Be sure to check that out. Well, everybody, thank you again. We'll see you guys next time. Bye for now.